Well, good morning, traders. This is Blake, and you are listening to the Face Show. Dale is still not here. He'll be here tomorrow. He is out. He's dealing with some migraine issues. So, just want to let you know he will be back tomorrow. Anyway, I want to say good morning, everybody that's here. I know it's President's Day, but in the U.S. and it's a bank holiday in Canada as well. But good morning, Simon. Good morning, Kman, Ryan, Michael. Gents, how's it going? It's a very slow session thus far. But I think we're setting up for a decent week. Ryan, good morning. Welcome back.
Morning, Blake. How you doing, mate?
Good. Just it's been a fairly quiet weekend. We've had as far as like news goes, and personally, I've been just kind of just chilling. My son's got a President's Day soccer tournament going on, so we've got pretty much that. But that's pretty much, but that's it. But waking up to the markets this morning, it's been a very slow start, hasn't it?
Yeah, very much so. It's a Monday, as you said, with the holidays. Mondays have tended to be a bit quiet of late. There's no data out anywhere. So yeah, but days like today, you look forward to planning what's happening the rest of the week. Getting ready for when markets do get moving.
Yeah, I mean, it's always undoubtedly pretty slow on a Monday when it's a holiday. But you had China come back, and we had Chinese markets reopen, but nothing exciting. I mean, the China 50 reopened, and it's pretty much slow, isn't it?
Yeah,
Actually,
yeah, it
that's
was.
not the correct. I don't think that's the correct. I think it was up a little bit, if I'm not mistaken.
Oh well, it depends which one you look at. There's a 300, the 50, the 500. You take your pick. One was up and two were down. So
Okay, I'm gonna pull up the China 50, but I'm gonna pull up
Guy
let's
was up a
see.
little bit. Good morning, everybody.
Good
Morning,
morning.
Blake.
What's that?
I see the Shanghai index was up a little bit too. It's a bit of a mixed bag over there.
nothing
Yeah,
inspiring. Let's
a
say
lot a
that
lot
the
of
first
people were
day back.
expecting that the markets might get a little bit it'd be nice if I can spell. Let's see. If the market, a lot of people thought that the market was going to rally this morning coming in off the holiday, right?
Yeah, exactly. But nothing inspiring. You would have thought it might have put in a bit of a good performance. Officials keeping up the pressure on sellers. But they came out with their F.A.C.E. They fixed pretty much 4 pips off where they fixed it when they went away, 7.10.32. So they're keeping F.A.C.E. contained. Left rates unchanged in the MLF, but are expected to cut tonight their LPR rate or rates, depending on which one they decide to cut. That was touted in Chinese press. So, yeah, we should get a rate cut early hours of tomorrow morning.
The market's expecting a rate cut out of the 5-year, but not so much out of the shorter term 1 year. So now
Yeah.
the question will be to you guys. I mean, do you think China is going to celebrate its new year with a little bit more of an aggressive cut?
I don't know if they go with a more aggressive cut. It's possible, of course. But I think we had the big RRR cut. That's the big one. This one is mainly for mortgages and the like, so it will help the property market. It's just a question of whether they come in overall and keep up what they were doing before they went to holidays. Clamping down on short selling, stock selling, or whether they let the market just decide for itself. But there's no international investor big interest yet, and that's the main thing that will keep stock markets on the soft side in China. But we've also seen gold picking up today as well. That again could be then returning to the market again. The fact it came off, in part due to what the CPI did and the dollar did, but it's no small coincidence it came off when China was shut as well, with them being solid buyers, and now we've seen a bounce when they come back in.
Yeah, so gold freaked out a few people last week as we dipped below 2000, but I think maybe we might be in this like descending, small, just very minor descending channel. Nothing to really write home about. It's like you look at currencies, and you've got the euro. By the way, Ryan, great pickup on the euro last week. I know you picked it up and you went off on holiday. But with the euro rallying off the 107 level, we have gold, bouncing as you would expect to. But there hasn't been big moves in currencies. I mean, even though the euro stabilized, it still hasn't gotten back above 108. And I think that's kind of what traders are going to be looking at this week, right?
Yeah, exactly. So it said exactly the same on the flow show. 107, 108 is our range for the moment. The bounce of 107 is showing that maybe we are looking to bottom, but unless it starts taking out 108, the trend for the year still is in play, and that's a downtrend at the moment.
Yeah, I gotta argue that we did make a little bit of a false breakdown there below 107. And so if you are on the short side of the euro, you got to be thinking about that a little bit. Now, there's some pretty key developments this week as far as the euro goes. It's not like we're facing the ECB, or it's not, we have the FOMC meeting minutes this week, but we don't have like an FOMC or central bank meeting. But it's the PMIs that are coming out on Thursday. We've got Eurozone PMIs, UK PMIs, and US PMIs. And that's what really, over the course of the last year, a lot of traders have been looking at this data, because this is what really showcases US exceptionalism, or has done that over the course of the last year. This week is going to be a big deal on Thursday, because we get those three PMIs specifically. And do you have any expectations there?
It's going to be a case to see whether it continues. We've seen a pickup in services. The US numbers doing well in both. Slight improvements in some of the European countries in manufacturing. Germany looking crap still. So yeah, it's just going to be a question whether we continue with some of these trends, or if we start turning them around. But yeah, that's the main data we've got coming this week. Although it's on Thursday, that could be a bit of a market mover for central bank expectations.
Okay, well, yeah, I think that's going to be a big one. Kman, what are your expectations this week as far as what's going to be a market mover for you? What are you looking around at and saying, I'm definitely going to keep an eye on this?
Well, obviously those PMIs, you've got a bit of revisions of CPIs out of Euroland as well over the course of the week. The issue is we are always attracted by this 107.70 magnet in the euro dollar, and FX vols are really coming down, and it's gonna take some data out of the expectations to really break the ranges that we are in right now. But as you say, I mean, the dollar has a bit of a struggle to keep the rallies. I do think that there's a bit of this optionality in it, because it's getting easier and easier to trade ranges, and cheaper to buy those options. So it's going to keep interest on both sides of the ranges. One I'm also going to keep an eye on is the Canadian dollar, because tomorrow we have the Canadian CPI coming out.
Yeah.
That is traditionally a mover. So that is one we should keep an eye on, especially with oils trying to keep the rally. So a bit of a combination of both, perhaps. That's going to be an interesting watch for the Canadian dollar. And then what else? You've got, for those who are trading emerging markets, like China, for instance, is tomorrow. You already talked about it. And then we have the Mexican retail sales as well coming in later this week. And I think that is on Wednesday also, if I'm not mistaken. And then the day after, we've got CPI and GDP also coming out for the mix. And looking at the levels where we are, 1700 in the dollar mix, just above that little zone, 30-35 on the euro mix. It's going to be an interesting watch. So those currencies are firmly, as I said, on my radar. Yeah,
Hey,
That's
Kman, I was reading a little bit earlier, 30 minutes ago or so, that South Africa's got its budget coming out on Wednesday.
yeah.
And we've been keeping a close eye on the rand just because it's so tightly wound up. You can see how it's just, I
Mm.
mean, just so wound up, and a lot of traders are getting a little nervous for their budgets, their 2024 2025 budget on Wednesday afternoon.
You,
I don't know if it's going to be a market mover. It's just some analysis that I've been reading from some banks,
yeah.
what they're looking at. But I mean, how scary is this that we've got a situation where traditionally a currency pair that tends to go down when risk appetite is rallying,
Mm.
you can just see it just pegged to to its highs. I mean, to its all-time highs. Really, we're not far away. So what's going to stop it from surging higher?
You've got several things coming out this week. So I think on Friday or over the weekend, we had the South African central banker saying that they were still not there on inflation. That cooled off the dollar rand a bit. But then we have unemployment, we have, I think, CPI, we have the budget. So this could be a pretty good week for the rand to be on the move. And as you say, it's been a currency that has not enjoyed anything of the risk-off scenario. So any weakness there, I'd say, is going potentially to be another knock on the head for the rand.
Yeah, this is one I want to keep an eye on. I'm very interested in getting long the dollar rand. I'm not long right now. I don't have any exposure, but this is something that I'm really keeping my holy cow, hold on, keeping my powder dry for. Ron, good morning, sir. I just seen Ron just typed in. Ron, I haven't seen you in a long time. He has been retired out of the markets for a few years. I met him in person in Dallas. So I want to say about I don't know, 12, 13 years ago. Ron, good to see you, my friend. I'm glad that you're here. Holy cow. If some of you in our ForexAnalytix community might remember him as Cal Lem. That's California Ron. So anyway, good to see him, my friend. So we got other things that are happening this week. Obviously, we got the FOMC meeting minutes. I don't know if I'm expecting a whole lot out of the minutes, but it might be a market mover just because I think the market's trying to cling on to a few things, especially how hawkish some of these members might actually be in light of expectations, really, coming down for interest rate cut expectations. What are your thoughts going into the FOMC meeting minutes this week? Do you guys have any thoughts there?
No, personally,
Nope.
not. We heard from all of them already before.
Yeah, we've heard a
I'm not
lot.
expecting.
We've heard from almost everybody, and we have more Fed speak this week.
Yeah, I'm not expecting much for the minutes. The ECB minutes are out as well this week. Probably the same day as well. If I'm not mistaken, I
No, next day, Thursday.
Thursday. All right, and I'm not expecting a lot out of either of those minutes releases. Perhaps, just perhaps the ECB showing a bit more divergence between the doves and the hawks, as we've seen over the past week or so. But a real market mover, I think the data will be more important.
All right. All right. Well, I did the week ahead video this weekend, and I'm in the camp right now especially for this, like, for probably the next couple of weeks as we come into this period of the market where I think there might be a bit of a pullback in risk. And one of the stocks that really captured my attention, actually, well, we've been talking about it here um, uh, for the last few weeks, when it broke out from 350 right here, this SMCI. Look at the big reversal that we saw at the end of well, actually on Friday. So this is, to me, the canary in the coal mine, the flyer that has has to have everybody's attention this week. This SMCI, and it's probably going to come out tomorrow when the market reopens. It's going to be bid up a little bit, but the question is, are they going to sell into it? I actually think that the markets are very stretched. That was the title of the week ahead video, and I'm very much in the camp of looking for short risk this week, and hopefully, depending on how the market plays out by the end of the week, I actually think that the market's going to show some signs of weakness this week. And hopefully if we close at the lows, we might actually get some follow through over the next week or two. So this is the week that I'm actually, actively looking for short risk trades. So, and I haven't been in that camp really since we've broken out. I've been nervous about the breakout, but respectful of the breakout. But as you can see, we are like whether you're looking at the S&P, we've got some really big divergences. Here, let me pull up this RSI a little bit. I'm gonna just drag that up. Just trying to, if it'll work with me. Okay, it's not working with me. Maybe I keep grabbing the volume, so do it this way. There we go. Excuse me. Okay, so you can see some divergences here, whether you're talking about the S&P, you're talking about the NASDAQ 100, same type of situation. Obviously, the NASDAQ 100 showing a little bit more weakness than the S&P right now because some of those big names. Dow, similar type of situation here. And so I think that this is going to start to actually weigh on the markets over the course of the next couple of days. How do you guys feel about stocks here? I mean, we have the S&P is obviously, I think we're at channel resistance. We're probing the 5,000 range. There's nothing really in between here and 5,200, but I do think we're stretched. Do you guys have any thoughts on where risk is at right now, Ryan?
Yeah, well, as you know, I've been trading this one, still in this one. Everyone keeps calling for the top for the last 2 weeks, and it's done nothing but go higher. But the signals are there. If you want to take it down to a shorter term, maybe an hourly or something like that, pretty much like I say, when people want to catch knives, you need to see evidence of a bottom forming. Well, here we've got evidence of a top. We've had the blow off of the latecomers last week. We saw a deeper dip down to that 49.20s. The patient buyers came in, took it all the way back up, but they couldn't take out the high. They couldn't even get as high as the last high in the 51s. So that's your first big signal.
Yeah.
Now we've got a week long top, if you like, which has been more than the 1 or 2 day tops that we've had recently. So there's stuff for both sides here. There's shorts have now got a level to lean on, that 40-50 area, but longs picked up the dip pretty nicely, so it's a decent trend refresh, keeps the trend going, but they need to take out that 51 high. So from here, it's 50-50 for me. But if you've been trying to wait for the dip, you had it last week. If you're waiting to sell rallies, this is your signal now that maybe you got something a bit more concrete to lean on.
Yeah, and I know you haven't been here the last few days, Ryan, because you were out on Thursday and Friday. But every day, for the S&P, been writing down the 49.20 level. Actually, I think the last 3 days or so. And on Friday, we came down and basically smacked it and came back. This is going to be a really key level in the markets. But what's really important about it by the time we get back down there, and you got to think about just fast forward ourselves, 24 or 36 hours from now, if we make our way back down to the 49.20 level, which will be right here, it's going to end up being channel support, which is going to makes it even more important, in my opinion, because you start getting a confluence of not only horizontal support, but you also get this channel that has been forming. So I think this 49.20 is going to be a big deal. And that's what I'm really focused on. And that's what's really going to tell me, hey, I need to really be looking for a much broader pullback as if we take out that channel. So I agree with everything that you're saying, though. The hourlies are starting to show that we're not making higher highs anymore, at least intraday. Radar is going to be up. Kman, what are your thoughts here about risk?
Wednesday, Nvidia, and I heard a lot of people saying that may be the last push, and because everybody is expecting monster numbers, and but some say like this could be it, you know, the blow off top, and then we reverse a little bit. The issue is that, and I'm not a big trader or fan of seasonalities, but the issue is with stock markets is that and the S&P is that we are going into a period mid-March until end of April, which is usually actually positive for the stuff. So if you add another month and a half or so of bullishness to the S&P, where are we going? But on the other hand, Goldman Sachs has revised the target higher for this year, so it must be the top.
Yeah, I saw they revised to 5,200 from 5,100, if I'm not mistaken. So yeah, and speaking of NVIDIA, just if you look at this, you know, this obviously we're in blow off top territory, guys. It's rare. When you see these types of moves, you'll see them in individual names, obviously, but to see it in in a whole index, you just don't really see it. But this stock is almost like an index itself. Hell, I mean, the company itself is worth you know, several small countries at this point in time. So if you look at a stock like this at a 261% golden fib, you can see how we respected the last 161% extension multiple times. And this is a weekly chart, guys, just so everybody knows. You know, we're at this other key fib level. So my expectations are that, and we were talking about this actually, I think on Thursday in the ForexAnalytix chat room. Wednesday's NVIDIA earnings, Kman, as you rightfully bring up, I think that's a sell news event. So even if you get a gap higher or you get a positive reaction, I think you sell into that strength on Thursday. And maybe, you're right that is what really signals a near-term top. I'm not saying the you know, long-term top, but maybe a near-term top in equities. So I think we need a lot more evidence to come to that conclusion that this would be a long-term top. Speaking of which, look at the Nikkei. The Nikkei just absolutely on fire, continuing on fire. Matter of fact, I think we're almost complete with this bull flag pattern. Let me double check this just really quick before I had it drawn out before. I just need to redraw it. Let's just double check that really quick. I believe it's complete, and it could be complete on a couple of different measures. So yeah, I mean, we're finally complete on that bull flag pattern. Crazy, right? What also is kind of crazy is that you have you know, the yen, which was just taken out 150 this morning. We're just kind of probing up here up against the you know, these recent highs. What do you guys think? Ryan, do you think that the dollar yen can actually take out 152? Because I'm looking for 154, and I'm starting to question if we're going to get it. So what do you think?
I don't know. I'm a bit suspicious that the way that they came out last week with their jawboning, they didn't ramp it up from, you know, a low ebb to a high one. They came out with all the lines: speculation, fundamentals, moving too fast, everything. They sort of went from 0 to 60 in 3 seconds. So that to me suggests that maybe they are looking at the level of the yen rather than the speed of things. Particularly, they know what's coming with potentially what's coming with the Bank of Japan. If they don't hit any of their tick boxes for the BOJ to end easing, then this is going to the moon, and they know that. So I think they're just getting themselves set up ahead of it. So can we get to 152? Potentially, of course, but I think it's all going to come again. It's going to come down to the data in both Japan and in the US. If the US is, you know, we saw weak retail sales, other weak numbers. If they start coming in again, the market's going to get a bit dovish. That means downside for the dollar. So yeah, I still think rallies are the way to go. Selling rallies is the way to go in this one at the moment. But you never say never for this pair.
Right, and this is a 6J right here. You can see how, and this is a weekly chart. You can see how weak the yen is. So, Kman, what do you think? Do you think we take out that 152 level?
I've looked at the dollar yen this morning, and if you put the 4-hour chart up, for instance,
Let me pull it up.
we are replicating with a little less amplitude, but we are replicating January. 3 steps up and then consolidating and actually going back down a little bit
Right
towards
here.
the end of the month. Yeah, and we are replicating that in February. And so I'd say sideways for as long as we stay below 150, 50, 80 on the dollar yen, with perhaps a possible retest of the 148 3/4 into month end. But then the people are just buying Nikkei like crazy. And what is keeping the yen under the cushion as well is that most of those do it on a relatively hedged basis. That is, they are buying the Nikkei, but they are selling the proceeds in yen out. So you have not huge flows, but you still have some of those flows are a bit negative yen, which explains the correlation very often yen and the Nikkei. But I think more a bit of sideways actions. I am not sure, although I'm like very tiny long just because it just continues to go up and it pays me a little bit to just be long. But I would say sideways until the end of the month, really, or perhaps at least until tomorrow. You guys really come back online.
Right.
Don't see too
Right.
much. Yeah, because there's nothing really very new. We had those wage talks, and all the major ones are pushing us back to the week of the 11th to 13th of March. So we are in a waiting pattern, and you see it on if you look at globally on the yields as well. If you look at the dollar yields, and I was saying this morning on the flow show the same thing, and I think I said it already on Friday on Face. The 2 years is at 465, 462, 465. That is exactly where the dot plots are for the Fed. So somewhere the Fed won this little battle with the market overpriced, but now we are there. So what's next? And with FX vols being suppressed, we could be in a period of relative stability, really.
No, don't give us stability. No,
I know what
no, this stability, as
yeah,
Jean-Claude Trichet would say.
it should be moving for all of us, but those things we will see where the pendulum swings, and the data will help us with that. But where we are now in those yields, for instance, is for me very, very neutral again.
All right. Well, thank you for that update. Now, guys, I just want to say that for all of you that are listening in, Adam Button from Forex Live should be here in just a few minutes. I'm going to be quizzing him about what to expect with the dollar CAD tomorrow, especially with Canadian CPI, as we've been discussing here. More importantly, I actually want to talk to him about the Canadian mortgage market. I actually heard from a I can't remember what call I was listening to last week. I think it was maybe like what is the one of those macro podcasts. I can't remember which one I was listening to on Spotify. Anyway, when I was listening, and by the way, if you don't know, you can listen to these shows on Spotify, the interviews, like the one that we'll do with Adam Button. You'll be able to hear it on Spotify as well. But anyway, I was listening to a Canadian economist, wealth manager guy, and he was saying that there's 900 billion worth of mortgages in Canada being refinanced this year. That's a crap ton of money considering that Canada is about 1/8 or 10th the size of the US. So I'm going to talk to him about that here in just a second. We'll talk about the Canadian inflation data coming on. Hey, guys, I want to also point out Kiwi's kind of outperforming here, or didn't really give us any indication last week that he was going to be like super hawkish, but the Kiwi still looks pretty good. You guys have any thoughts about this? I mean, the Aussie Kiwi, I'm short, so it's, I'm happy about it where it's turning from, but you guys have any thoughts on the Kiwi real quick?
We're against resistance to me in this 61 40 65 zone. that's where it resists. The market is pushing back rate cuts, and we know from ANZ they even think they could hike rates, but we're still in the range, and we still haven't broken. So we have to wait for confirmation there as well.
All right, and Ryan, last minute thoughts before we go. I know it's a holiday, and you're going to be off probably with the kids. Anything else before we jam out of here?
No, not really. No, the kids are back at school now, so yeah, I'm full on with the screens. So yeah, no more slacking for me.
All right.
It's you
Well, we
lot.
have this.
It's you lot throwing up holidays every 5 minutes.
What's that?
It's you lot throwing up holidays every 5 minutes.
You know, that's what it is. People like to take the day off. Unfortunately, I wish I would play ball with these holidays, but I tend to work during the holidays, which is never not so fun. Anyway, all right, guys. Well, thanks for joining me today. Take a look at crude oil, man. Crude's gonna be the thorn in the side of not only the Fed but other central banks moving forward. I think it's what's going to be a little bit of an issue here. So watch crude. And thanks, Ryan. Thanks, Kman, for keeping me company today. Remember, if you guys are normally, you're like, where's Dale? Dale will be back tomorrow. He texted me last night. He's had a migraine issue, and he was up really late last night because he texted me late. He's not a person that stays up late. So he texted me after I went to bed. He's like, I'm not going to be able to make it in tomorrow. So we'll see him tomorrow. And thanks, Ryan. Thanks, Kman. Appreciate it.
Cheers, mate.
Cheers, mate.
All right. And if you guys don't listen to those two on the Flow Show, make sure you do. It's free every morning. You can go right to our website, get right to the Flow Show link on how to listen to Ryan and Kman as they host the Flow Show every single day. And with that being said, I've got Mr. Adam Button from Forex Live. Now, Adam, I do not and will not turn on my video today because I didn't think I would be hosting. So no one needs to see me early in the morning. Good morning to you.
That's all right. They don't need to see me, I suppose, either. I'm doing great. Yeah, good morning to you.
Yeah,
Happy President's Day.
It's a present. Thank you. It's a President's Day here. You know, it's I was saying last week, it was one of those holidays for me. I've not been happy with our choice in presidents for years, and I'm talking like years. So ever since my kids have gone to school, which has been 19 years, I really, this is the holiday that sneaks up on me. That my wife would be like, "Yeah, the kids are home today." I'm like, "What? For what?" It's President's Day. I'm like, "Oh, okay, great." So, for the last literally for 20 years, I just really don't pay attention to this holiday. So it snuck up on me again. And I don't think it snuck up on the markets because everybody's kind of quiet right now. So what are you looking at? Oh, I don't know if you listened to what I had to say a little earlier.
Yeah, I heard you talking about Canadian dollar there. Man, it's good to have you here, Dale. Blake. We'll change it up. So nice to chat.
Yeah, it's a little bit of a change up, and I'm Adam. I'm usually listening in when Dale does these face shows. I let him roll and do his thing, but I'm usually have it on in the background before I turn back on CNBC or Bloomberg or whatever I'm listening to for the day. But yeah, I always hear your interviews. But I was really interested to talk to you today because we got Canadian inflation tomorrow. But B, I don't know if you heard what I said. I was listening to some wealth manager that said that there's 900 billion worth of mortgages refinancing in Canada. He's a guy that's out of like Toronto. I forget who he works for RBC or something like that. Anyway, he said 900 billion, and I was thinking, okay, that's a big number for Canada. That's of mortgages they're going to refinance. I haven't done my homework, meaning I haven't like double checked his work. But it was on one of like the macro podcasts, a big one. So what are your thoughts with this year and the Canadian housing market? And do you have any thoughts there?
Yeah, Canada's running into a lot of problems right now. And I think, I think I'll start with just a little primer on the Canadian mortgage market and how it's different from America and why there will be a big divergence in the two. 30-year fixed in America, you get a mortgage, 30-year rate is as long, for the whole duration of the mortgage.
Yeah.
Whereas in Canada, everything works on 5-year terms. So the longest mortgage you can really get is 5 years. And you either have a choice of either a variable mortgage during that or a fixed mortgage. but at the end of 5 years, it starts over. So, everyone refinanced during, whatever, if you go back 5 years, I guess that takes us to 2019. But then as the years roll on, you get to 2020, 21. Like I refinanced in 2021 at 184.
Wow.
So, it was like free money, right? I even levered up the house.
Yeah.
So someone's going to give you that kind of money. So what's happening now is these are rolling off for Canada. So there are these variable ones all the time. And of course, it's like American, when you move, you have to get new ones. But it's also like American that no one's moving who has one. But
it's great for the mortgage business. I tell you, I'd like to be a mortgage broker in Canada.
and what's happening is people can't qualify anymore to get even the mortgage they had. So then they're turning to like alternative lenders who are, essentially loan sharks, and you're getting like 10 or 12%.
Oh, geez.
So then the discretionary spending just implodes. And so even if the Bank of Canada starts cutting rates now and gets it down to like 3%, a guy like me come 2026 is going to have a higher mortgage. And so you have this headwind coming for Canada that's really just getting going right now. So you have the entire mortgage market rolling over.
So Adam, I don't want, I hate to interrupt you here, but I want to just say it's not just you though. Like UK is facing with the same issues. Australia, same issues. Now, to a certain extent, I mean, there are different, obviously variations from country to country, but this is a big issue moving forward.
I mean, to me, it's enormous divergence coming with the US. Canada also has higher nominal house prices than the US and lower incomes, significant. So everything is about to get sucked into, the home price payment black hole. And yeah, it is the same in the UK. And Australia is very similar to Canada, New Zealand as well. So, 36% of people, only 36% of people have mortgages. Like a large portion of people have homes paid off, massive amounts of home equity as well. And a lot of that home equity is fueled spending, right? Especially for the kind of baby boomer cohort who's long paid off their houses or have small mortgages, bought the houses for, a third of what they're worth now or less.
Yeah.
So there's a few different dynamics, but over time, it's inevitably an enormous headwind. And Canada is also having a very dramatic, I think, debate right now. We'll have an election about immigration. I think the numbers in Canada are like half of the US in terms of immigration in a country, like you said, that's, really 1/10 the size. And there's huge numbers of people coming into Canada every year. And like the services, really the mood, if you look at the Globe and Mail and national newspapers here every day, it's really the same story that it has to stop. And if you look at Canadian GDP per capita, it's like the worst in the last 5 years of any G7 country. Whereas if you look at nominal GDP, it's grown, but it's all population growth. Yeah. And I think that population growth lever is about to just get kneecapped at the same time as housing problems. And then Canada, if you go back to 25, 30 years ago, was sort of a manufacturing export country at the dawn of NAFTA to US.
Yeah.
That's completely gone. And the other leg that Canada used to stand on was resource extraction. And due to red tape and other policies, that is no longer a growth lever for Canada. So what's really left? I mean, what is Canada selling to the world? Money comes into Canada as a safety trade from China or other places, but that's no way to sustain an economy. So I really think some dark days are ahead.
Yeah, that's scary. What you outline, and the thing about the thing about, like, you go to your immigration issue, for the United States, for the last 20 years, getting to the United States from different countries was done through and via Canada. So if I was, let's say, of Indian descent and I wanted to eventually make my way into the United States, I would go into Canada because your immigration policies were a lot more lax. I would go into Canada, be a Canadian citizen for however long I needed to, and then apply for U.S. citizenship, and that was my route to get in the United States. And so you think that those immigration policies are set to reverse?
like the charts are just sensational for Canada. One, like just to get into the details, a lot of it was just students. Like, so there was colleges were suddenly allowed to really grant unlimited amounts of like small kind of community colleges, unlimited amounts of temporary residence permits. And that way, especially from a few countries in Southeast Asia, was kind of a backdoor to Canadian immigration. So temporary students went from something like 100,000 a year to 1 million, literally in 5 years.
Wow.
And you had these colleges that were like almost 100% people from Southeast Asia. And then they would come and they changed the rules so you could work 40 hours a week. So it was just people coming, signing up for a college, really not even going to class and working. And the whole thing, it was just a house of cards. And it's kind of collapsing in slow motion. You see Trudeau's trying to keep it together because he's extremely pro-immigration, but the tide has very much gone out on it. And then that's going to have like knock-on effects in the employment market, right? Like this was all low-end employment. And so then maybe you have an inflationary problem out of that, but maybe growth is so bad. I mean, housing certainly needs to be built in Canada. I mean, Arizona is building a lot of houses, but I believe there will be a housing boom in America and construction once rates start coming down, or maybe even without that. But
it is a really interesting dynamic. And it's funny you mentioned Arizona because I live in Arizona. I can't tell you this time of year how many Canadian license plates I see. I live in Scottsdale over by where the golf tournament's held. And so this time of year it's like all Canadians. Well, not all, but I would say like a big chunk of them. I wonder if that's going to be the case moving forward.
Yeah, I mean that sort of cohort is still pretty wealthy. I mean, any Canadian dollar weakness, they get hung up on that. Is a problem. But the price, good weather in retirement. I mean, most retirees are on, solid income. So maybe for 20 years, I think it probably lasts, and then we'll see if the next generation has anything left.
Yeah, crazy. Well, hey, I'm in the camp that I can't take it with me, so I might as well spend it, right?
Well,
just kidding, joking. But that's a lot of boomer mentality. Hey, let's talk a little bit about Canada's an interesting dynamic, and I think that when I look around at the issues that are facing, whether it's Canada, Australia, certain parts of Europe, Gear was just talking about Norway's similar. A lot of these countries. Expendable income is about ready to get evaporated over the course of the next couple of years. And not saying that it won't happen in the US, because I fear for, some of my nephews, a couple of my nephews didn't buy a house and they're in their 20s and in their late 20s, and they feel like the American dream is not so achievable anymore. And so we do have obviously the generations that are kind of priced out of the market, but at the same time, you got a lot of people that they'll just sit in a 30-year mortgage as long as they can continue to work and pay it somehow. But let's talk about the rest of the, like interest rates and what you're looking at here, because a lot of people, as and this year we came into 2024, obviously expecting a ton of rate cuts from the Fed. And, the market's kind of repriced. Now the market's looking at maybe 3 to 4 cuts this year. Where do you stand, and what's going to move the needle from here?
Yeah, a lot of it's looking a lot like last year, right? It looks just, everyone thought it would be cuts, and then it didn't happen, and the dollar strengthens, and here we are, kind of like part 2023 part 2.
Yeah.
And right now is a real rare alignment moment for markets and the Fed, both pricing, the Fed saying 75 basis points, the market's at 89 right now. Which just, you could probably consider that last 15 basis points just tail risks, right?
Yeah.
For market pricing. So, I'm watching the data kind of point by point. And for me, it's kind of what we do. And that's made it a very interesting market. And just the market only seems to care about the last data point right now. And, very excited about CPI. and then not so much about retail sales. And the Fed comes out, we kind of listen to their last words. When I look at the big picture, I don't think it matters that much whether they cut, because if they don't cut, it means the economy's great. And if they do cut, well, now you've got 525 basis points of the Fed put in place. So,
Yeah.
I think the U.S. economy can do well either way. And it's probably more of a factor for the equity market, that scenario. But in FX, yeah, I think a lot of these other countries are going to crack. And if America, I just don't see, I can see America slowing down. It's going to finish the year certainly weaker than Q4 was in 2023. And for that reason, maybe you see some yen strength or dollar yen weakness, I'll put it more clearly, towards the tail end of the year. But for right now, I don't see a lot of places. Europe is really asleep at the switch. I'd be pretty eager to cut rates. I mean, you have a recession in a lot of places in Europe right now. They got through the winter because it was a warm winter, in terms of energy, but you could have another energy shock next winter. Manufacturing in Germany is dying a quick death.
Yeah, it is. It really is. So, I mean, that it sounds like to me, and just reading through your commentary here, or reading behind the, well, you're basically a dollar bull, and you can't see any reason for the dollar really to slow down much near term.
Yeah, and part of that's just being an America bull. Like I look at the state of capital markets, right? I mean,
Yeah.
you ask somebody to name a technology company from Europe. I mean, does anything even come to mind? Whereas America, you can ream off, 25 without thinking. And America is just winning really on a lot of fronts. I mean, I think that the sentiment in America is that it's losing a lot, but when you zoom out and you look at it, I don't know, from America's doorstep, American markets are absolutely crushing it. And I am pretty bullish on US house construction. And there's a tailwind from the IRA and chips that will last through the year. I mean, yeah, you could make a bearish political case, but I think there's so much in the pipeline right now that I don't think I want to do that.
Yeah,
And who
interesting.
knows what the future holds, but
Yeah,
American business.
and you make some great points here, and again, it's like, where do you hide? So I'm going to ask you this, as we'll wrap up our President's Day show, and I'm going to tell you, Adam, I'm going to get with you personally. I'm going to invite you out onto Trader Summit. Love to bring you on there, and interview you one-on-one with myself when I can actually sit down and think about things for us to talk about versus coming in this morning going, oh crap, Adam's going to be here. Let's talk. But let me ask you this. Looking ahead over the course of the next couple of weeks, where do you think is going to be the best place from a trading perspective? What are you going to be looking at and say, I really am looking to play this on the long side, this on the short side? What are your thoughts right now?
Yeah, I think the game in town right now is China. I think there's, if there's a headline that I'm looking for, it's something out of China, which will be right into the Australian dollar.
Okay.
So either way, you want to trade that. China is at the point right now that it needs to do something. And I'm not sure it's going to happen. So either the bottom falls out or it picks up here. The travel numbers over the holiday week last week were good, up 20%, 19% compared to pre-COVID. So the consumer has some life. Construction is a big problem there, or real estate. I think that there's a big question mark in the global economy this year. It's China, and a lot of knock-ons coming off of that. And so I think otherwise you kind of trade the data, but if there's something to get me excited, it'll be China and some
Okay.
stimulus.
Well,
We didn't get it
and you're,
today,
but it sounds like you still question if they're going to be able to pull it off.
well, I'm starting to think the guy in charge is a communist. Like, he
Wait a second.
A story last week said, the government has 5% of the housing stock. He said he wants to have 30% of the housing stock, some by buying it, maybe out of bankruptcy or sub-market rates, and some by building it. the building part, maybe that's fine, but they don't need 30% more housing with a declining population.
True,
So
true.
you
Yeah. So
presume they're just going to just scoop up the wreckage, but that sounds messy.
that
And
it does. All right. Well, okay. So China's one of the places you want to be. Where don't you want to be?
I touched on Europe. The UK, there is, they keep highlighting that the UK is different. The inflation dynamics are different. The wage dynamics are different. And I just don't see it. I think there has to be a pivot out of the UK, but it might be one of those late pivots, right? And I think that's oftentimes worse for a currency, right? Like sometimes we're going to get to a point where cutting rates is going to be good for a currency because they're
Yeah.
so late to the game that the growth side is so threatened by high rates.
Right.
And I think the UK might be falling into that trap. And so, if they stay more hawkish, I don't think it's going to help the currency, and I don't see them cutting anytime soon. But so I would watch that, and I'd be pretty cautious on the pound.
Adam, you bring up a great point. I think traders need to understand this, especially if you're trying to understand how to build a macro thesis around the markets. You said something that I think is very important that took me a lot of years to learn when I first jumped in the currency market in the early 2000s, is that rate cuts, if early, could be very supportive for an economy and good for a currency. Rate cuts too late could end up really hurting a currency, and it can end up, really, signaling some weakness for a currency. So I think that's good if that you bring that up, because I think a lot of people miss that point as currency traders.
So now you're really trading on the wisdom of central bankers, right? And who do you want to bet on that's out
Yeah.
there?
Yeah.
So it's not a great field, but some are better than others.
Yeah, well, Adam, I really, really appreciate you being here. I want to ask, what's the best way for people to follow what you do?
Great. Well, thanks, Blake. ForexLive.com. We just write about Canadian PPP just before our PPI, right before I came on. So we cover economic data kind of as it's released and write about what it means for markets in kind of real time and try to just sort through headlines as they come or market moves. Sometimes you see those moves on your chart and you want to know why they happened, and we aim to try to interpret that. And oftentimes telling you there is no news is valuable for a trader as well, because then it's flows or fixing or whatever else it is. So ForexLive.com, and we're there whenever the market's open.
And I have to say, guys, you make sure you follow Adam. I've been a big fan of his for years, especially when he took it over from Jamie way back in the day. So Adam, you're doing a great job over there at Forex Live. Like I said, I'm gonna reach out to you personally, bring you on a Trader Summit, and get you involved there as well. How's that sound?
That sounds great, Blake. Well, right back at you. I mean, the world certainly needs more macro insight and trading insight. A lot of a lot of the wrong people seem to get the most attention in this industry. So
Scary, right?
it
is.
we've both been at this a while, and it does not seem to get better. But
Yeah, I know. It's a scary thing. Anyway, hey Adam, thanks for coming in today. I know it's a holiday. It may not be one for you, but yeah, I know the markets are kind of slow. You'd probably better off twiddling your thumbs than being here. So I really appreciate you being here with our community. And like I said, I'm happy I got an opportunity to sit down and speak with you. I'm going to reach out to you and do a little bit more one-on-ones with you myself. Sound good?
I appreciate that, Blake. Take care. Thanks for having
All
me.
right, take care, Adam. And thanks, everybody. That was Adam Button from Forex Live. Make sure you check him out. Follow him on Twitter. What they do some really great work over there. And for the rest of you, if you are in the ForexAnalytix community, I will see you on the Morning Edge. I'm going to do the Morning Edge before I head out. So we're going to go ahead and build out that bias chart that we do for you every day. We'll go through all the instruments, and I'll be with all of you as I always am, one-on-one. So I'll see you there. And for the rest of you, we'll catch you tomorrow morning. Make sure you check out the Flow Show with Ryan and Kman. And then I'll see you tomorrow morning on the F.A.C.E show And hopefully Dale will be here, and I'm sure he will be. So you guys all have a great one. Thank you so much for tuning in, and I'll catch you later.